Today, the best part is that this is a panel discussion with investors who have been working in the EV domain or wanting to work in the EV domain. I have got an amazing panel in front of me. I'd love to first get the panelists introduce themselves. I know many of the people who are listening already know you, but maybe we can have an interesting introduction that what was your first personal interaction or experience with EV, whether in terms of your personal experience or investments. Maybe we can start with that, right? And then let's set the ball rolling. So maybe we can go alphabetically. Arpit, you can start.
Hi everyone, my name is Arpit. I have been with this firm called Blume Ventures for about 9 years. We invest into early stage companies defined by $1 to $2 million, typically what is called as pre-series A investments. Sector agnostic but technology focused. I am an investor with the heart of an engineer. What I really enjoy is to talk technology and how technologies can change business models and how that eventually leads to completely new opportunities. So I've been fortunate to look at the electric vehicle ecosystem from the deep tech lens first, about 7 years back when we met our first company in electric vehicles. I did not invest in that company, but it has been amazing learning. All our journey of about 6-7 years, we had tabulated and summarized in a EV primer. If you go to evprimer.in, you'll get a 160 slider about introduction to electric vehicle space. We have invested in a bunch of companies. I will talk about them in just a bit, but we'll first answer Akash's question. My first personal experience with EV, which I really enjoyed, was my test drive of Nexon EV. When I was taking the test drive, I realized how different this vehicle feels, how different will it be to live with that vehicle. Honestly speaking, did not end up buying that for a variety of reasons, but I think that established the idea that electric vehicles are here to stay and they are very exciting.
Amazing. Neeraj or Nikhil? Yeah.
Neeraj, you're alphabetically first. Go ahead.
Yeah, so I was just trying to figure out, like, within Nikhil and Neeraj, which one comes first. Yeah. So thank you so much, Akash. I think for me, especially, this is like full circle, very nostalgic. I remember meeting you. I think that was my first interaction with the EV as a business model. Okay? And I think you were one of those very first founders who kind of were very bullish about this whole transition that India was taking place 4 years back. So my basically knowledge or first insight about this and what can be possible, I think it came through you. Okay, during that that first meeting with you at a coffee cafe day. So from there, if I see today, from We Founder Circle, we have invested in almost all possible business models around EV. So you being the last mile champion, then Blue Smart, in which I think all of us at some point of time has invested. Then OEM company called India's first two-wheeler motorcycle, completely indigenous, urban EV. Then on battery side, we invested in one company called Energy Company. On a community level, we recently invested in a company which is building a EV community. Then on charging, Kazam. So right from cab to last mile to OEM to charging station to kind of like community and a battery, we have invested in all these domains. But I think the confidence and the inspiration actually has come from Zypp, because we have seen the journey right from the initial days. I've seen this business model also of yours completely pivoting from what it was and where we have reached. So I think that ups and downs, and I think learning alongside with you and the other founders has given us a confidence. So we are not so experienced in terms of thesis about this EV as Blume has done. I think very comprehensive document. I've seen that. I studied that also. So I think those were the benchmarking from my peer groups and the other industry. But I think as a company or as an investment team, I think we have learned most from the founders. So that's my learning. I think that's my playbook. But we are very happy that I think we are one of those platforms who have a very strong portfolio of EVs now, and we are very, very bullish about it. And that network effect is what we are looking at right now. I think it is really helping in some.
Awesome. Great.
Thank you, Neeraj, for the mention.
Maybe I can go next.
Yes.
So my first experience, and first of all, Akash, thank you for inviting us for this podcast, for this webinar. Prior to Grip, and I'll talk about the company, but I used to work with the World Bank as a policy consultant on electric vehicles. I think the first closest interaction with EV was a trip to IIT Chennai, where there was a professor leading the charge on electric vehicles, and they were doing some incredibly fascinating stuff around batteries, swapping vehicles, and everything else. And they had made this stand to actually swap a electric bus battery, right? Which is insane. We hear about two-wheelers swapping, but they had tried to build a swapping for buses. Obviously an idea which I think everyone realized does not make sense. But I think the innovation that I started seeing happen across the country, especially in an institution like IITs, I think was one more reaffirmation of the opportunity that lies in electric vehicles. Just as way of introduction, Grip is probably one of the largest leasers of electric vehicles in the country today. We have leased over 4,000 two-wheelers just to Zypp, but we have a 200 crore portfolio of assets leased to about 40 different electric vehicle companies, everything from two-wheeler, three-wheeler, four-wheeler, cars, heavy-duty 60-tonner electric trucks, battery swapping infrastructure, manufacturing infrastructure. So we're the largest leasers of such equipment. What makes us different is that all this excitement with venture capital, we wanted to make sure that the individual investor could also participate in the electric vehicle opportunity, and we create an investment platform where you can invest 20,000 rupees to participate in the EV sector, predominantly fixed income, but also early stage equity. So that's the business that I run.
Great. No, thanks, Nikhil. Yeah, IIT Chennai is definitely an institution for EVs, no doubt about it. Great. Rajesh, sir.
Hello, everyone. This is Rajesh. I run GSF Accelerator. So look, my first experience with EV was way back. I think I was at a conference in London where they demoed Tesla. So these are just like space age 2 vehicles they brought, and I drove it. So that impression remained. It was a very space age looking thing at that point of time, almost 10 years back, right? But the three, four experiences that shaped my perceptions were these. One, I went to Amritsar in 2018 or something, Golden Temple, and all vehicle three-wheelers, they were EVs. They were taking me from one place to another place within the city of Amritsar.
Okay.
Then I realized that, these EVs going to happen from the bottom of the pyramid. It's not going to happen in the way I thought of Tesla. Right. The second was, I think 2019, I visited China, and we spent to some places and met some founders who were doing very cutting edge work. And then I realized how big it could be, right? It's like from Amritsar to China, then I felt the impact of this technology, how Chinese were innovating. And I think you gave me a ride, Akash. You brought your smaller, earlier version of Zypp to our cafe, one of the, those founders meets we have.
Correct.
And that's where I met you first, and you were part of one of those. And you were in a different avatar of Zypp, I think. Then you moved on from there. So these are three experiences that shaped me. And finally, I'm one of the first buyers of MG EV in the country. One of the first three buyers. So just before COVID hit, I bought this vehicle, and then I was like, it was going nowhere for months. Maybe me and my wife Chaya used to go for a few rides here and there together. So those are my experiences. I think I've done 3-4 investments. I've not done many investments, but it's part of my larger sort of growing thesis on mobility, how mobility is shaping the world. And my current thesis on mobility is footpath as a service, but we'll talk about it later.
Nice.
I've already exited a company. A company started e-bike go. They gave me 10x exit, and they went into OEM route, but I wasn't so excited about it, so I took that exit. Currently, I'm investor in Zypp, small investor, and also Beepcart, which is into two-wheeler EV financing.
Nice.
Also Tireplex, which is another mobility-driven marketplace. Currently issuing a term sheet to a company in this space. So these are some of my limited exposure to EV.
Nice. No, we can catch you riding your EVs anywhere in Gurgaon. I know that.
I'm wondering which, maybe I should buy an Ather as a two-wheeler. I'm confused about it. You can suggest.
Sure. Sure. Great. Thank you. What about you, Tej?
Hi, Akash. Thanks for the invite. And I think all other panelists are quite well versed with EV. But like Rajesh, my first experience was when I was at Fosun, and I went to China back in 2017, 18, actually, and I saw these little bikes, running around like crazy. And they were almost like cycles, right? Like how we see cycles in India, especially in Beijing. A lot of these minis, and I was wondering like what is going on other than Oppo and these bike sharing was huge. And then these were just coming up, and then what I realized is that the cost was almost equivalent to a cycle, right? Almost like maybe 25% higher cost. And my boss actually was the guy who through his QR code opened one EV bike for me, and I took a ride on the Beijing street. So that was my first experience. And at that time, I think in India, there was hardly any EVs which were there. So, and then I think, but now it's good to see, how the market has evolved. And we still, I think, pretty much at the basement level, very, very small, 13 lakhs. 13 lakh is, I think, the number of vehicles which are EV vehicles. So, I feel for a country like India, especially, of the two-wheeler market that we have, this is just a start. And just another story is that, Exponent was the company which actually Your Nest and my friend Kunal Khattar invested. They still owe me carry for that. Because I introduced them to this company, which has done incredible work. So, those were my experience with EV. And again, Akash, with you, I've learned a lot. So thanks a lot for that. Yeah.
Appreciate it. No, thank you so much. What about you, Vansh?
Yep. Hi, everyone. Good evening, firstly. I'm excited to be part of this panel. Thank you, Akash, for putting together such a great event. I am representing Venture Catalyst, and of course, I'm sure quite a few of us have co-invested alongside each other in multiple deals. As a group today, we have a portfolio which comprises of close to 250 startups. We have a very active angel community of more than 3,000 angels that invest almost $50 million plus every year in early stage startups. And besides our angel platform, there are 3 managed funds that we've gone live with, which are together, managing almost $500 million of committed corpus. EV, of course, has been a sector of key interest, especially over the last 3-4 years. I think as the session progresses, I'll touch upon the investments that we have done. But my first interaction with EV was in my previous role with a company called Indian Angel Network. I had personally, as well as through and the network, invested in a OEM player called Strom Motors. So I think I still remember as part of the diligence, back in 2017 is where I first saw somebody in India, creating a whole indigenous vehicle, and that too in a very innovative manner. It was a reverse 3-wheeler structured small car that they wanted to make, and they eventually did succeed in making and giving an exit to all the investors. So last year I had an exit with that. So I think my first experience was way back in 2017 with Strom. And I think since then there's been a lot of interest, and with venture capitalists have been seeing how companies have evolved and how newer models, and frankly your own journey. I think we met first time at Indian Angel Network, and then through venture catalyst, you became a portfolio for us, and the journey that you have had has of course taught everyone who's been part of the journey quite a lot on how to figure out the right business model in this space.
Thank you. No, great. And I know some of you have partnered in the journey, some of you have not, but this is my time to actually talk to a lot of VCs and tell the world about what's happening. So it's like a founder, talking to a lot of VCs. Aapne kyun nahi dale bhai? So just taking a fun element there. But I think coming to the serious talk, which themes do you think in the EV domain or EV segment, because you do a lot of investor catch-ups, evaluate a lot of companies, and I'm sure a lot of founders would listen to this conversation, who are starting out, or as we know that we are at the basement level when it comes to the electric mobility or vehicle sector in the country. So which are the themes that attract you, right? Whether it's the OEM, whether it's charging infrastructure, whether it's swapping infrastructure, or it's financing, or it's deep tech, batteries. I think we'd love to hear from you that if one of these themes that you would want to pick, which one would that be and why?
I don't mind going in first on this one. I think
Sure.
While of course the entire industry is right now trying to figure out what would track, but if we just take a step back and rather put an analogy of the whole IC combustion engines industry. Yeah. So if you see that the largest the most beneficiaries have been the oil manufacturer, oil companies that are largely naturally occurring substances controlled by the nations. So with that analogy, I would definitely put the whole battery infrastructure and the swapping infrastructure is definitely going to be a big beneficiary and a great investment vertical within this space. And of course, the fleet industry, specifically the industry in which you operate, because there are some serious advantages of switching to an EV. And so I think for us, I would definitely put the best bets on I would say the fleet ownership and the whole charging infrastructure play, be it innovating on the technology side, or be it swapping services. And I think intersecting all of these, if you look at the conventional current whole mobility market, I think financing will continue to sort of foster on top of both these things. I think for us, I would say these three would be the big winners in this, is what my view is.
Fleet, charging, and financing. Got it. Okay, thanks.
So just to add on to what Vansh has said, and I think very rightly, he just mentioned the two pickings. And what Rajesh ji was also mentioning, I think his also, personal story, he thought the consumer side probably will excite the segment first, and then I think the further adoption. But I think it has the sentiment has been corrected itself. Okay, so from a consumer, actually, it's a commercial B2B kind of models are taking more acceptance in the market. So where you have also pivoted from B2C side to actually on the logistics last mile side, I think there the adoption has been much faster than what we all anticipated. And I think that is driving. So there are use cases in the control of the people, basically, who are the end consumers. So in this case, probably the e-commerce players are driving the lot of demand of actually converting their ICE model, say, logistics and supply and the last mile, middle mile, all of that into EV. From two standpoints. One is it's a huge number of fleet that they are managing, and I think they are giving business to the other small players also. But on a larger say level, because now they are raising bigger capitals and they are already sitting on huge capital.
Yeah.
So the whole carbon credit thing in zero emission has driven the focus actually of completely transforming their existing supply chain into EV. And when they understand, because if they are the end beneficiary of this entire thing, they also need to be enabler of this entire adoption. So what we have seen is, and I think that has really helped the other startups, be it the infra guys, the charging, or for example, the lease business. I think these are I feel is a byproduct of that demand. Okay, because the core focal is these bigger use cases. And I think they are not shying away from participating, not only in terms of giving the business to these other players, but also coming in and say participating in the funding rounds, giving them debt and equity financing both, and also helping people to kind of set up these infra much faster than probably they themselves could have done. So I think from that standpoint, I see this is a good network effect, which is driving the consumer demand right now. And I think next, if you ask me, Akash, this has been the current situation, but next, I think 24 months, I see a lot of OEMs also will be getting a lot of attention from the consumer side. People are coming with very smart scooters. Already we have a couple of options, but bike, like we have invested in Open, so they are ready for delivery next month. Already sitting on 20,000 pre-bookings. First Indigenous, they got the approvals and all. So I think these kind of startups will, I think, drive the next phase of EV, which is more of consumer side demand.
Sure. Got it. Arpit, you've been.
Yeah, so we have been looking at this sector in a more comprehensive manner, Akash, as you know.
Yeah.
So we have, I think we were ahead of our curve in our ability to understand the sector, not ability, but just applying our mind. And as a consequence, we have built a string of pearls. We think all of these are great opportunities. We have an investment in a mobility company called Yulu, which is our first. We also have investment in an OEM company called Euler Motors, which I think is doing quite well. There is a swapping company called Battery Smart and a charging company called Electric Pay. So both of them are doing exceedingly well in their own spheres. And more recently, we invested in a company called Vecmocon, which is the auto component hardware software manufacturer for EVs. We have been looking at a bunch of other plays also, financing plays and EV retail plays, but haven't taken those bets. So from our perspective, each of these are large opportunities because the overall ecosystem, as it grows up, will become very, very large, and each of these will play a role in it. Therefore, there is value to be created in models which are across the spectrum, not just one of those. So yeah, wouldn't be biased towards financing or OEM or swapping. All of them are doing in various parts of the journey doing quite well.
Sure. Great. No, I'll twist the question a little bit and take the views from the others who want to talk on this. So while I think Arpit has invested in so many sectors, from Blume, Neeraj has done, Vansh has done, right? So everyone wants a pie of climate tech, sustainability tech, where EV plays a role, right? But still, I would say a lot of large VCs have still not taken an EV bet. When you look at, right, you don't see any large VC on the cap table of Blue Smart, which has been doing well. I think Tiger is the only one who's putting money in Battery Smart, but you don't see Euler also having a large VC. Yulu doesn't have a large VC, right? Obviously, I'm talking about, let's say, a Sequoia, or I'm talking about an Elevation. So just your thoughts. I mean, what's been the reason? Any learnings? That you can call out that, hey, VCs, what have they missed, or what have the startups missed, or what could be the reason?
So you want someone to be controversial?
Little bit.
Look, I have looked at Blue Smart ever since its evolution. I've been pitched this company 5 times, every round. But so I'll tell you, I in hindsight, I think it was a miss for me. I could have invested. It's sort of the thesis at that point of time was the market is taken between Ola and Uber. So is there a play for a new thing? And if EV were to become a thing, anyway, Ola, Uber will transition into EV, right? That was sort of the thinking. And it's really luck or wonder of collective funding that Blue Smart has got, multiple rounds. Hats off to them. not only survived, and it seems like they're becoming the preferred option of commuting, especially from airports for me.
Correct.
So it's hats off to the entrepreneurs who are, despite the VC winter they've faced for so many years, they've managed. And this is what the wonder of entrepreneurship is. So look, I think there are some segments in which the thesis is that they're not capital efficient, EV when you think of, and that's why there is a bit of resistance. But clearly there are a lot of sectors which are now becoming very VC attractive within EV landscape. So I think 2023, you will see a lot of that. A lot of them burned their fingers with this lime experiments that happened in the US, right?
Yeah.
That has not played out anywhere in the world. It sort of seems to be from China to US, it seems to have burnt billions of dollars as not, this was a Western VC's primary thesis.
Correct.
Last mile mobility with some electric gizmo kind of vehicle moving around.
Yeah.
That has clearly not been the case for India. India last mile, according to me, is footpath. The government should invest in footpath and people should walk. And that's what we should do. It's a very different market.
Yes.
I have always believed that fleet before consumer will be the way India will build EV. And that's why I invested in you also. I think that's where the big adoption will happen and infrastructure will get built out. And then consumers will come. And that's the case here. It's not consumer first adoption.
Yeah.
If you see the US's adoption of EV happened through hybrid, through Tesla. Now Tesla will become cheaper. I think India, as I alluded earlier, it's bottom of market, where two-wheelers will first create large ecosystem before three-wheelers. But somehow it seems 2023 is where the inflection point is coming. Right?
Nice.
It's all adding up. All these EV guys are adding. I think this year will be 50 odd new cars and scooters launched. Is crazy, right?
Yes.
And the mileage is now at a point where it makes sense. When I bought MG, it was 200, 250 charge, right? Kilometer. But I always knew it's good enough for me within Gurgaon or Gurgaon to Delhi weekly drive. So I never bought it for a longer system. But now with 450, Tej can drive to his favorite town, Chandigarh, and come back. So that's amazing. I think that kind of elongation that is happening will create a lot of consumer adoption. And now you will see a hockey curve of adoption.
Right.
So I think we are just at that inflection point. Some of the companies which have moved in early, like yours, now need to ride this wave to build big. And I think within that space, there are a lot of technology-driven companies that can come, creating layers of software, layers of service, and create value. So the game, as I bolte na, kahani to bhi shuru hui hai.
Yeah.
So it doesn't matter. Also, for a lot of VCs now, there is also a push from their LPs. So there's an ESG push, there is a sustainability push. They're being asked, why are you missing out? So you will see VCs coming late. Your large scale VCs hain, Sequoia, and maybe Elevation, you said, they can come late, right? So unlike Blume or Rajesh Sawhney, who miss early stage, then we're done. They don't have that pressure. They can wait to come in Series B. Wo bhi miss ho gaya, so they'll come in Series C.
Right.
So they may come in your company in Series C. So I think for them, the game is they're watching. They were not early believer,
Right.
but they will come in. So that's how I see VCs playing out.
Nice. So 2023, the year of EVs is what Rajesh sir has
Totally.
declared.
I think you saw that this motor expo that happened.
EV
It was
Expo.
all about EVs, right? So the momentum is all there. Technology inflection points are there. Government is incentivizing. Most of these OEM and their suppliers have pivoted to EV strategy, from Minda to Comstar. So a lot of stuff is happening.
Yeah. Yeah, I just want to add to Rajesh sir's, what he's saying. I think that, when I was at Fosun and we used to evaluate any EV company, or I used to take back the market was so small that it was almost irrelevant, right? So my partners would totally dismiss because there were other better geographies to invest in. And the base was not even created, right? Even at IvyCap, we have not taken, a bet so far. And, because, we do like 50 crore check sizes. So, so for us also, we are not yet, because, in the sort of auto manufacturing space, we understand it will take a lot of money, right? Like Ether, etc. So, if you are looking at a good return, how do you justify that investment, right? So we are actually still building our thesis. And I think Zypp is, obviously is a clear example of breaking out, sort of making it a reality that this could happen at scale. Similar to Rajesh, I looked at Blue Smart, but our again asset heavy sort of a thing, we could not get over the hump. I mean, at that time, obviously companies like Grip were not there. So I think Grip has done a great job to kind of enable, financing to the EV guys. So I think ecosystem is now developing in such a way where you cannot ignore it anymore. And it is, where you will start seeing disruptions, breakouts happening. So like I totally subscribe to what Rajesh is saying, to start with, right? So now it's a way to go from here. Yeah.
Awesome.
So,
Anyone
Akash,
else? Yes.
I would love to. I have been thinking about this question for a long time because this is also my philosophical question about why VCs do a certain sector or not. There is, of course, I completely agree with Rajesh. Some people have seen negative success or failures in an OFO or line, and therefore they are not very gung ho about it wherever they learned it from. Second, we must also admit that everyone has taken bets. Sequoia, Excel, Omedia Network, Alpha Wave, etc., are in Bounce, and Bounce is a fabulous company. Before COVID, they were doing exceedingly well. They were like almost becoming a unicorn and so on. They may have figured their way or lost their way, doesn't matter, but they were early to understand the EV opportunity also. There is also Log9 where Sequoia has invested, Exponent where Lightspeed has invested. So yes, some investments have happened. There is also Turno, which has a couple of other investors. So the investment is going in. The later stage investors like GIC have come into Euler and so on. So there are more and more of this is likely to happen. The one important thing, while the question could be sort of rhetorical, why more is not happening? So there are always two reasons why more is not happening in any investment. It could be VC investment or public market also, is that people haven't seen success yet. So success begets success in our market. Unfortunately, we haven't seen too many models emerging, and India is such a unique place that you can't even rest on the laurels of an app success in China or US and say this is where it will flow, because it will soon meet contradictions inside your IC meeting itself, and you will not be able to cross that hump. The second is that often it requires someone to follow this over a longish period of time to see that this is actually quite fundamental in nature, and one investment in EV is not enough because each segment is very different and a large opportunity in itself. If you are going to collapse everything between an OEM and swapping and financing, you will probably not be able to stand out and make a difference and make differentiated bets. That's also going to come in the way. So, however, the good news is, like everyone, like Tejas already mentioned, everyone is looking at this in a much deeper manner. There are pressures from LPs. There are growing trends about climate tech investment. And the fact is that everyone can now see and touch and feel what EV opportunity looks like. And so this is bound to happen. Where you stand and where unfortunately the place, and I think the question is also personal for you, where you stand.
No, not for me. It's just for the industry. I'm happy.
There's another mobility company which is into B2B mobility and is serving the gig economy. yes, you are actually, unfortunately, dealing with the innovator's curse, where you are ahead of the market. People haven't understood it. People think and give 100 intelligent reasons like asset light or asset heavy, and unit economics has not been positive. I have given you that reason. And therefore, it doesn't happen. So, unfortunately, there will always be such cases. But then, as entrepreneurship is, you are not bound by a set of people saying yes to you. You will find your way, which you have. But more and more entrepreneurs, Yulu is an example. It was clear number three in that business, but now Yulu is far ahead of everyone else. They have figured it out. We didn't need to wait for other investors. Entrepreneurs will figure out.
Yes. No, I totally appreciate that. And that's a great answer, Arpit. Thanks. So I think the next up, I'd like to, since this it's hardly, a time when you get so many people who have evaluated EVs on the panel together. So I think, and this one goes to my giving back to the ecosystem, right? And hence would love to seek your advice for the young founders who are wanting to start up in the EV domains, right? What is your guidance to them, right? What should the founders in the EV space should look at as a guidance from a VC or from, the investors that you are? And we can go in any order.
Maybe add a little bit more context to that question. Guidance in what way?
Sure. So guidance basically is that I am a founder, I'm starting in the EV space. What should I watch out for? What is your guidance? Because Nikhil, you've worked with a lot of EV startups yourself. You've done so many investments, right? So how would you guide them that, hey, look at this part more, or look at this sector more, or look at this kind of investor more, so that it's just a, fast track for them?
Sure. Okay. I think maybe one or two of the most common places where I have seen founders struggle in the EV space is one, trying to build a copycat service business. Okay? I think a lot of companies, Akash, tried to do what you were doing on the delivery side, on the last mile side, but did not, because they saw success in models like Zypp, e-bike, Go early in the days. And a lot of people try to pivot what they were doing or start in that same manner, but they didn't necessarily put the resources in the way that it will become successful. So I think the intent to start something or replicate something that is becoming successful without putting the necessary things in place, I think is a recipe for disaster. I think that's definitely something to look out for. And we've seen a number of companies, who had 50 vehicles, 100 vehicles, try to adopt the logistic. And you've probably seen or spoken to many of them for probably acquisition over the number of years, right? So I think that's one. I think second is there is a number of EV businesses in the deep tech space or tech around automobiles, manufacturing, even the supply chain that are getting into. I think there's a big question mark there about your ability to sustain. Okay? Becoming an OEM is a very capital intensive long-term business. And I think people need to not necessarily think of it as a VC fundable business on day one. A lot of us get into the mindset that we'll get VC money and we'll be able to do this, but every business is not VC ready. And I think there's a need for people to prepare themselves for that much longer journey, for different forms of capital, maybe some kind of path to profitability beforehand, and then go from there. Like it's been discussed, I don't think we would have had a BlueSmart today if they had not had the great fundraising that they got, or a Log9 or a Euler, right? And all supported by strategics, not by VCs, or like a sovereign, like, Euler got supported by Asian Development Bank, Log9 got supported by Petronas. So I think putting the filter on the kind of capital that will be available to you is really important, because this is not a short journey.
Yeah, exactly. A very interesting point what Nikhil has made. So one is dependability on the VC money itself, I think it's a roadblock. Okay, as far as entrepreneurs are concerned, I think they have to look beyond that, especially at the early stage. So continuous funding, small rounds, okay, bringing HNI, strategic investors, bringing the consumers also into the stakeholders also into the journey. I think you have yourself actually created your own recipe. Akash, none of us basically knew that how, I think the next year, the next round will come. Okay. While we were raising the previous round.
Thanks
But
for giving the money at that time.
No, but I think that was the whole thing was, we knew that, I think with the kind of passion and I think with the kind of say smartness, street smartness that you were building and trying to solve each say part of the puzzle, I think that is commendable. I think, and that's how I think most of the say the new entrepreneurs also have to look at that. Now you on a last mile business model, you or the supply side business model, you already is a success story for others to follow and to learn from your journey. I think a similar effort needs to be done on the OEM side also and the product category. I think few founders that we have been working with, I think they are also very, very clear in their mind that they are not only looking at the VC money. It will come at its own time and I think pace. But if you can find out an alternate method of actually like leaping, say one step to the next step, I think that is what is required. And I'm very sure, like, for example, I'm again giving my own portfolio example because we have spent 2 years with them. And now that they are starting their deliveries, I think the confidence of bringing 5,000 vehicles on road without the VC money, if you can reach to that milestone, okay, getting the approval itself was a big milestone. That creating a product, a world-class product, getting it approved from AirI, and now, okay, putting out on road. So the moment I think you reach to that level, okay, in your category, you already done that. On OEM side, if we have 1 or 2 founders who reach to that milestone that yes, 5,000, 10,000 bikes are there on road, I think then the confidence and this, say the hesitation from the investors, the big VCs, I think that will go away. And I think you will see a lot of funding happening as every one of us are feeling that 2023 could be that trigger point where you will see a lot of VC money also flowing into the ecosystem.
So prove your thesis frugally is what you're trying to tell.
I don't want to say this, but I think it's the founders who are helping shape the thesis for VCs. They don't know basically what to do with this, but I think you guys are the people like who are helping every one of us.
And I think just to add, what typically I think where a lot of early stage founders, when we keep receiving opportunities in a very early stage, given the whole fancy nature of the whole EV market, many times early stage founders are trying to come out with way more fancy models, which may work in a westernized, in a Western market. But I think what you've also taught me, how beautifully you can just keep things simple and figure out the real problem that you're trying to solve, rather than just being hardcore innovators and continuously sort of trying to come up with something too fancy that doesn't give confidence to VCs whether this will be a fad technology or it'll sort of be able to sustain. So I think many times, specifically at the early stages, what's really happening is people are trying to come out with not keeping things too simple. I think innovate where it is necessary, and rest. There are enough and more examples to sort of keep things very simple. Platforms like Grip are great platforms that have come up to really support and break down that notion that this is a very capital intensive industry. You've done that. Blue Smart in our portfolio has done that. We've recently invested in a company called Metafin. That's again financing the whole EV space. Models like Switched, they sort of reminded us of what you were doing prior to the current avatar of Zypp. So there are interesting models, and the timing of the market is something that founders have to be really conscious of and keep it very, very simple. Those are 2 things that I've learned with while working with you over the last 5-6 years.
Great. Thanks. Arpit, Rajesh, Tej, anyone would want to give any guidance to the founders listening to us?
Yeah. So,
Rajesh, sir.
look, so I think the market will offer a lot of opportunities, but it's like you have to think through on 3-4 different prisms. Are you going to build a full stack business or a marketplace business? And be very clear about that. Are you going to build a software innovation or a hardware innovation? That's second way of thinking about it. The third is within this whole battery technology. I think there will be a lot of innovations that need to be done to bring next generation battery ecosystems to the market. So are we just going to be a country that's going to import battery technology, or are we going to add value here? what value will be added. But it's linked to supply chains and manufacturing, right? So that's where this industry is different from the traditional software-driven industries that VCs are more comfortable investing in. So it has to be positioned differently. The capital intensity is higher, I think, in this industry, because whatever innovation you do, it gets mixed with investments in supply chain or investments in manufacturing and brand building. But it will have different kind of investors who would get attracted to. So keep your eyes open to building early traction, be differentiated, and create a long-term sustainability. I think it'll create a lot of values that I can see. It will create at least 10 unicorns in a few years. Certainly, I think which will be Indian in orientation. The challenge here is that there's very little that we can borrow from West in this.
Yes.
That is the biggest challenge, and that doesn't give confidence to very smart, expensive, McKinsey-trained analysts that VCs have, because they don't have a playbook to sort of advocate inside. So that's the blue ocean that is available.
This one will go as a short, it seems. Arpit is smiling.
Also, Akash is like,
I agree with Rajesh. I think it is important for entrepreneurs to give fodder to every piece of the chain, and because a smart enterprise salespeople are trained in this, that a gatekeeper will think differently from the influencer, will think differently from the decision maker. So you will have to play that game.
Yeah, absolutely. Sorry, just before that, before Neeraj, maybe we'd like our audience also to put the Q&A tab, use it, put your questions in. We'll open the floor with the audience question in the next 10 minutes. So please type in your questions and we'll take them, most of them if we can. Yeah, Neeraj, you were saying something, please.
No, I was just saying that I think your success story itself is a proof of the network effect, okay, that will play a lot of, I think, the catalyst effect especially for the young entrepreneurs. Now imagine, basically, I still remember, and I quote it everywhere, the day I think you signed a contract with the Hero guys, okay, the kind of like order that you have given and placed on them. I think the next day headlines were all that Hero bag an order from Zypp Electric. Now to me, that was, I cannot tell you how proud I was feeling. And I think that is like a sea change. A legacy business in their PR is saying that we bagged out order from Zypp. I think that is the kind of network effect that you are bringing on table right now. Imagine how many these OEM suppliers, the battery side guys, okay, the drone company, like for example, you recently given us a drone company opportunity to invest in, which is like warehouse to warehouse, at least. I think that mobility part of value chain that will also come into play at some point of time. I think how much of business that you yourself can now drive for the young entrepreneurs. I think that's a big, big change. And I think more such stories like yours or Blue Smart, I think you will be driving a lot of business. And I think it's a big traction that they can look for. So
Sure.
Yeah.
No, great. No, I think so. So the next question, we can't have a VC panel without this question these days. So I'll have to put that out for the audience, which is, there's a season of funding window, right? Everyone is talking about it. Now, what do you have to say about that for the EV sector? Maybe Tej, you can go first. You've been silent for some time. We'd love to hear your views on the funding winter on the EV sector. Is it there? Is it not there?
So my general comment on funding winter is that, if you find any one of us, if we find a rightly priced company which is growing and doing good business fundamentally, none of us would like to miss it, right? Because our job is to invest, and Arpit has just raised, lots of money. So has everybody else here, right? So there is, by the way, there is $570 billion with the VCs worldwide, right? And our job will not be our job if we don't deploy. We'll be out of the job. So I don't believe in this this noise of funding winter, but obviously, that euphoria of 21 was crazy. And, I had seen a lot of, sort of the downturns. This was the first upturn I've seen in my life, which was out of whack, right? So a lot of companies got priced, very highly. Entrepreneur expectation, become, too high, and everybody was Elon Musk for that year. So, so that was the problem, right? I think now we have to work hard to make revenues to justify those valuations, and so I think in particular EVs, as a sector, is I think there are the headwinds are good, yeah. Matlab, everybody's, it's not just a buzzword, but people do care about clean energy. That's a big theme all across the world, right? And my son, he doesn't use plastic bottles, for example. He tells me he carries his own bottle, right? So it's actually which is so nice to see, it is getting ingrained. So I think you are actually on the other side. If you are in EV business, everybody would want to talk to you. That's my take. Yeah.
Nice. Anyone else want to take?
Yeah. The last 1 quarter, 4 companies in the EV space which we leased to have raised cumulatively $200 million. I really don't think. I think that there is a slowdown in funding, but I think relatively, given the tailwinds that exist for EVs, I think it's really the other way around. People are coming around to this opportunity, and when there is a slowdown in funding in other spaces, I think some of that capital will potentially get redeployed to electric vehicles. So I actually think that if you have to Tejas' point, if you have a growing, well-priced business, I think you can probably take a premium on valuation if you're an EV business.
Interesting.
Well, just to add on this subject, I think more than the funding winter, about what we've felt at Venture Catalyst, it's been a very rationalizing environment for the whole euphoria that got created in 2021. I think there's ample amount of dry powder lying with lots of VC community, with corporates, the government support. As long as you're able to build a long-lasting, sustainable business with a proven model, I think there's ample and more money to be deployed than ever before. So I think that's the other side of what the whole so-called slowdown of 2022 has led to. So and if EV, as we've all been saying, I think 2023 could be that year which starts proving thesis for a lot of VCs who are still sitting on the fence. At least at our side, we've had 16 companies in the EV sector. I was just for this panel, I was just counting the EV exposure that we've had. Out of these 16 companies, I think 9 of them have come since the start of 2022, which was supposed to be the funding winter of sorts. So I think everyone's sort of clear that this is the next way forward. I think the numbers that the market size that looks to sort of grow massively over 2025 and 2030, given the whole very strong tailwinds. I think I don't see any challenge or any sort of a winter hitting the EV sector specifically. Our portfolio companies have gone on to raise almost $250 million. There's been $250 million getting deployed in these 16 companies that we have funded as a group. So I really don't think this sector won't attract funding or there would be any slowdown as long as the business models are made nicely and there's sustainability to the whole model.
Sure. Great. No, so I'd like to ask another question about, some of you have made investments in the EV space, right? Like Venture Catalyst has done, Neeraj has done, Arpit has done. What moved the needle for you when you made your first investment? Is there some learning sitting in there that, like Rajesh also has done? So what moved the needle? Was it actual sustainability? Was it the sector? Or was it pure, just the founder feeling? I mean, just would love to understand that. Maybe we'll have some learnings sitting in this answer.
You want me to say?
Why not, Rajesh, please?
Yeah, for me, there were 2 things. One, my predisposition to a sector, and the founder, and what I found compelling about your personality, right? That hustling, hungry look with some strategic thinking behind it. is always very welcome in a founder. But little bit of predisposition, as I said, my thought was that I'll fund a logistics company first before I fund a consumer sort of company. I may be right or wrong, but this is how I predisposed. That's why maybe I missed out Blue Smart.
Right.
But actually, I don't regret it because it's so much of capital dilution there. If I had invested, think about it, if I had invested $10 million, right? And I would have diluted 90% by now. Even if the company is becoming $1 billion, the outcome for me is 10x, which is nothing, right?
Sure.
I invest in a company at $1 million and that company does 20% dilution, builds a $100 million company, I am far richer. For my investment thesis, actually, Blue Smart doesn't work, to be honest, right? Companies which are going to do heavy dilution and keep raising money are not great companies, actually, right? They may be good for some guys looking for 3x, 4x returns. But if you're looking for 100x returns, this is not going to happen here, right? Especially not in ride sharing.
Great.
So you are looking at outsized returns, right?
Yeah.
So I think, for example, if you play the game smart, you will not only be able to attract capital, it is strategic for the development of the company, but you have to be very careful not to over dilute and deploy your capital smartly with debt, strategic assets, and equity smartly. So then you will make wealth for yourself and also for your early investors. Otherwise, if you're going to give me 10x return, then it's okay. I'll have a cup of tea with you and write a Twitter note for you. But really, if you want to make us wealthier, then you have to deploy your capital differently. Sorry,
Sure.
I'm very political about it.
No, your personal EV disposition really helped, and obviously the founder has.
Totally. So you have to. I think it's always the case. Your experiences and what you have, like in the case of Blume, they have 160-page thesis.
Yeah.
Right. So hats off to them, and so therefore they can take his choice of word. I was listening very carefully. Comprehensive. We will invest in every part of the value chain. We are not like that, right? Yeah. We understand what the game is, but within that, very pointed opportunities create great returns.
Yes.
So it's strategic for us. For me, EV is one of the biggest fundamental shifts in technology happening across the world, but it's not the only game in play, right? There's the same for many VCs. So we'll find equally attractive opportunity and maybe in regenerative AI, right? So,
Nice.
So Akash, like for example, just to add on, what compelled us to invest in like 8 companies in last 2 years in this. See, we are very sector agnostic in terms of our approach to 100 investments in 2 years. But some of the industries that we really believed in, EV was one of them. So it was the belief in the ecosystem or in that segment, that has driven our decision of actually then keep investing in the different business models which are complementary to each other. So in a sense, it's an ecosystem approach of investing is what we adopted, especially at least for the EV sectors. And I think apart from EV sector, there's only 1 or 2 more sectors where we are slightly more focused. But otherwise, given the nature of the early stage investor networks, you have to be sector agnostic. But within that, if you can find your why and find your basically the gold mine and can take bet on one of those sectors, then you have to be comprehensive. I think that's the only way out. The early stage investors are not like VCs that you pick up one bet and keep on investing in that. The ecosystem approach of investing works well for our kind of business model. And I think I can tell you that after like 8 investments, different business models in just 2 years, this is now helping us to attract better founders at the early stage because people feel that these guys at least understand it. And I think we have that founders network effect also is playing in our mind. A lot of people come to us not because we understand this space, but they feel Zypp is their portfolio. So at least like those founders can really help us. So I think that is playing to our strength now. And I think eventually, I think this will become the other side strength also, where a lot of VCs are also looking at our portfolio and okay, and trying to basically consult us on the investment thesis that they are trying to build on.
Great. So you picked EV for a
EV
sector to be invested. Got
as a
it.
sector.
Great.
I think on
Arpit.
this,
Yeah, sure. Vansh, please go ahead. Yeah.
no, so I think just to add what Neeraj is saying, I think for us also at we predominantly do early stage investing. So I think two factors that have triggered us to take all the investments in the EV sector that we have done. I think first and foremost has been the founders' pedigree and their passion, the spirit of fighting it hard. We've seen your journey, how you've sort of had a phase of struggling and then sort of figuring out where your inflection point would be. We've seen that with Blue Smart also, both Anmol and Puneet are fighters, what they've built in the past, that conviction and that, fighting spirit. With Sheru, one of our investments, we've seen how, the Ankit and team, how they've sort of had their learnings on ground. So I think specifically in the EV sector, I think we're very clear, we want to back the right founders who have the spirit of fighting it out, because it's not a sector where the thesis and the playbooks have been laid out. You have to back founders that can sort of figure out what to do on the ground. I think that's one of the large theses before when we do early stage investing in this sector. And second and foremost thing that we definitely look at is the whole market opportunity. We don't want to in a market that's still discovering itself. We really don't want to go in a very very niche or where we can't imagine what could be the total addressable market. Well, I understand Rajesh's views on Blue Smart. Well, we also had those questions in our mind, hence we sort of stayed out in the first round. But from the second round onwards, we've backed Blue Smart in every stage. Given I think the whole TAM was never a question for what a ride-hailing service could do. While what is the eventual outcome is it's something that is yet to be discovered. But I think these two are biggest verticals that we touch upon before deciding and investing in any company in this space.
Got it. Great. Arpit, you've written a thesis on this, so possibly.
I think the answer remains the same whether you're doing an EV startup or not. For every entrepreneur who's looking to raise money, one has to look at venture capitalists or any other kind of investors as people who often don't understand enough, as people who are prone to make mistakes, and as people who are looking at this interaction as a learning experience, as Neeraj has said and Vansh have said, that we learn a lot from every interaction we have with entrepreneurs. One mistake that often people make, and at the same time they are trying to do business here. The reason why I am meeting you or I am doing this panel is because it serves my business interest. Therefore, if you are getting a chance to meet someone and this person is otherwise quite busy, you don't meet them often, it may be a good idea to listen to what they are saying and then reflect on it and iterate, use that as a learning opportunity and iterate for the next person. Obviously, if you get a term sheet in the process, you will take it. But what you will also get is a load of feedback, and they like you enough, they'll also make introductions which will help your business. So I think the right approach for an entrepreneur at whatever stage should be to keep looking at the feedback that he or she is receiving and keep using that for the benefit of the business. Whether funding will happen or not is something that is an order of probability. It's not very easy to predict. There are some people, of course, there are people like Kunal Shah who will call 5 people and all 5 will say yes. Unfortunately, none of us in this panel are privileged, I'm guessing, who have invested in, to have gotten that call. So we will also have to find our Kunal Shahs of future, right? So we're also working hard toward when we get there. But yeah, please understand us as humans and as people who are always fallible and as people who will make stupid mistakes all the time.
Correct. Oh, appreciate that.
I just want to add, I think since we have not taken much bet on EV, I think we can now benefit from Arpit's and Neeraj's and everybody else sort of hard work, right?
Yeah.
I think we are sitting on the other side now. And our eagerness is to invest, as we see this emerging out. So, sometimes it takes a Paytm to build a phone pay, right? So, so I think there's benefit of, yeah, but going back to Rajesh's point, then you have to also think about what kind of return would you generate, right? Is it 10x or 50x, right? So,
Yeah.
but I think there's now enough juice, in the system to really benefit with the ecosystem that has been created now to start taking it seriously and taking some bets.
That's exactly why we did this panel, Tej.
Yeah.
To warm all of you all up
Yeah.
for so many other founders.
And,
So some job
Tej,
is
I can tell you, Tej, you will get at least 30 pitches on your inbox.
Looking
Tomorrow
forward.
morning, I think you will get it. A lot of people are listening here, and I think most of them are entrepreneurs.
Yeah. I think by the time I do the next panel, I want to be like fully an expert on EV, right? By the way, best way to learn is it in whatever learning I have ever had is through founders, right? Because they are living and breathing it. So I love I love talking to all of them. Yeah.
great. In fact, for that, you should also go back to the previous panel with Arpit did with founders about business models in the EV sector. So it was very nicely done. But coming to to an audience question, I know I will not be able to take all because of the time paucity. But yeah, this one looks interesting. Sumant has asked this, which is given the lack of previous history in the EV domain and the uniqueness of the Indian market, how would you approach valuations and multiples? There's no set example. We've seen China fail, we've seen US fail, and these are new business models. So how do you kind of, as investors, how do you set valuations and multiples in these cases? Anyone?
So it's easier at the early stage, okay? So we are not worried about it because we know if it is a success, it is going to give us good multiples. So I think not so much of a multiple question actually when we are taking a decision at the early stage. It's more of like belief in the sector, as I said, and the good pedigree of founders like who are like really passionate to kind of create a success. But I think going forward, the next few rounds, and I think when the VC money comes into the picture, I think it's a bigger question for people like Arpit and for Tej, because for them it's like a continuous investments and okay, keep like helping the founders for next subsequent rounds. So it's a bigger question for them. I think they're the better people like who can answer this, that how they are deciding on the expectation of their own multiples in those companies. Yeah.
So very simply, Akash, early stage investing is largely about how much money founder is looking to raise and how much stake the investors want, and it's a multiplier of that mostly. For example, a founder is looking to raise 5 million and investors want 25% for it, so there is a valuation set.
Correct.
However, in case of, but you will have to justify this at least in your mind that at scale this will hold, and at scale there will be some degree. So, and also multiples are typically more useful at a later stage of the business. Let's say a revenue multiple when you are, let's say 20-30 crore rupees of top line, then someone can apply a multiple saying, okay, what is the public market comp, and put that, discount that, increase that for the growth and so on, and give you that multiple. So typically you will see that even in businesses like EVs, there are auto companies, there are energy companies, there are equivalent, let's say what's an equivalent of shopping company could be a company which is into a lot of small scale operations. And also leasing company there are many leasing companies who are listed. Those kind of things can be utilized. From the perspective of an entrepreneur, unfortunately, you don't know how the investor is looking at it. So therefore, you'll have to use their guidance and see what best valuation you will get. In any case, multiples is a theoretical exercise because most entrepreneurs will have one term sheet at best. So you have no choice. You don't have a comparison, and you will take whatever you get.
Got it. So what more is needed for the entire EV industry to kick off? Whether it's any government policy that you have in mind or anything on the lending side that you have in mind, right? Any which possible lagging indicators that we all think that we should solve for, before it really disrupts. While we are talking about 2023 to be the EV year, as per Rajesh, but any of these factors that you would want to address? Nikhil possibly?
Yeah, sure. Well, we continue to believe that financing is a huge challenge. And even that, you can break it up into three components. And maybe linking, Akash, to your first question, one of your first questions about what other space are interesting. As from a financing lens, I think the opportunity to build around the ecosystem, whether it's batteries, vehicles, not just manufacturing, but actually secondary market services, I think is going to play a very large role in solving the financing challenge. So whether it is fleet, whether it is companies, business models, I think financing is a big challenge that we are seeing. I would think that government and regulation will always remain something that we have to maneuver, right? But today, a sector that is getting the maximum amount of tailwinds from a government perspective is probably electric vehicles. So I think that will solve over a period of time. And great founders like yourself will find a path to get through some of those challenges. But financing coming out of at a lower cost can have such a dramatic impact to unit economics and profitability, can change your pressure from how many rides you need to do on a daily basis, what gets it there. So that I continue to believe is the number one challenge.
Great. No, I think we've had a great panel. Any last thoughts from anyone to summarize stuff? Yeah, Neeraj?
Yeah, just wanted to add to the last question only. I think that's a summarization also from my side. See, I feel personally, if the finance and the infra, which is the charging side of station, if these two problems can be solved at scale, I think this industry will get a surprise from the demand coming from the smaller towns. I feel the adoption of EV on a consumer level will come from smaller towns and even rurals. That's my bet on this sector. Because that's where I see more of excitement of like adoption of the technology itself. And I think on the economy of mobility itself, on the cost side, I'm saying. So I will not be surprised if EV become a phenomenon in small cities of India.
Wow, interesting. No, great. Thank you. I think we had an amazing panel, and thank you so much for everyone for joining us today. Great thoughts, great levers. I'm sure a lot of founders would learn, a lot of investors would learn from this panel alike. And thank you so much for sparing time with us, and would love to catch up with you all in person in March as we conclude this, EV conclave together. And thanks once again to Blume, VCats, 9 Unicorns, who've also, partnered with us as sponsors for the event, right? Great. Thank you so much.
Thanks so much, everyone.
Thank you.
Take care.
Bye-bye. See you.